What if your money could work while you sleep? Not magic, just a plan you can start today. In this video, we'll break down a practical three-stream blueprint you can begin this month. It's about turning small choices into steady, repeatable income without quitting your day job. The idea is simple. You build a rain barrel for money, you collect a little water from each source, and soon you have more than a trickle. We'll anchor the plan with one habit that matters: automatic contributions that compound over time. If you automate it, you remove the daily choice that almost always drains your progress. The three streams are dividends, a digital asset that pays you over time, and real estate exposure through REITs. Together they form a ladder, not a single rung that can slip. We'll walk through a concrete 90-day plan with numbers you can actually copy. I'll show you how to set up the accounts, the monthly contributions, and the guardrails to stay on track. First, set a clear goal that you can return to when the going gets tough. For example, aim to add $1,000 of passive income per month within the next year. Next, build a small safety net and a simple budget. A one-month cushion and a basic spending plan keep you from dipping into your hard work when life throws a curveball. Then decide how you want to split your effort across the three streams. A common and resilient mix is dividend investing, a digital asset, and REIT exposure. Now let's dig into stream number one, dividend investing with automatic reinvestment. This is the easiest to automate and scales well if you start early. Step by step, open a brokerage account, choose a dividend-focused ETF, and set up automatic monthly contributions. Enroll in a dividend reinvestment plan to let the cash come back as more shares instead of spending it. Start with a modest seed, say $500 to $1,000, then add a fixed amount each month, like $150. Over time, the compound growth and the reinvested dividends can create a steady stream. Explain the math in plain terms. If the portfolio yields 4% a year after fees and you contribute $200 monthly, your future passive income climbs steadily. It might take a year or two to notice the big jump, but the habit compounds regardless. Watch out for risk, of course. Stock prices swing, and dividends can be cut in a downturn. Diversify across sectors and keep a long-term horizon so you don't chase quick spikes. Now Stream 2 is a digital asset that asks for a small, upfront effort and then mostly runs on autopilot. Think of it as a simple, evergreen content asset that generates affiliate revenue and a modest monthly cash flow. The simplest version is a single, well-researched niche site or a print-on-demand storefront that sells one or two evergreen products. The goal is to create something you can outsource or automate after the initial setup. Action steps. Pick a niche you know or want to learn, research 20 to 40 topics around it, and publish a comprehensive pillar piece. Then build a small email list or a simple opt-in and attach affiliate links to products you would genuinely use. Set up a basic framework for automation, hire a writer for monthly updates, use a scheduling tool for posts, and connect your affiliate accounts so earnings come in without you touching them. Expect modest early results, perhaps a few dollars a week at first, but treat this as a digital asset that compounds as more content and links accumulate. You can add a second product line later or expand into related topics. Finally, Stream 3. Real estate exposure through REITs and real estate ETFs. This gives you exposure to property without buying a house, which is expensive and management-heavy. Choose a broad REIT ETF or a real estate-focused fund and automate monthly contributions. A typical package might be a few $100s per month that you never touch outside of reinvestment and the occasional rebalancing. The math is gentler here. Real estate tends to deliver steady cash flow through dividends and potential price appreciation, but it is not without risk. Use a long horizon approach and diversify across property types and regions. And of course, taxes matter. Passive income is still taxable, and some streams are more tax efficient than others. Consider speaking with a tax advisor about how to structure your contributions and withdrawals. At the heart of all this is a simple habit: a weekly or bi-weekly review that keeps your plan honest. You don't need to be perfect, but you do need to be consistent. Here is a straightforward 90-day plan you can follow. In week 1, set the goal and open the 3 accounts you'll use: a brokerage for dividends, a platform for your digital asset, and a REIT account. In week 2, fund the accounts with a small starter amount and set up automatic monthly contributions. Create your first evergreen piece for the digital asset and publish it. In weeks 3 to 4, optimize the digital asset for automation. Hire a writer for monthly updates, connect affiliate links, and test a simple landing page to capture emails. In weeks 5 to 8, you should see the first real numbers. dividends reinvested, affiliate earnings growing slowly, and a modest contribution to the REIT account. Keep it steady and resist the urge to revamp everything at once. Weeks 9 to 12 are about refinement. Adjust contributions if you can, rebalance the portfolio, and document what works. If a stream underperforms, consider reallocating a portion of the monthly amount to a stronger one. Common mistakes? Spreading too thin, chasing hot tips, or treating automation as a one-and-done project. The opposite of passive is relying on a single source and hoping it pays forever. A few tips that keep you sane: keep the costs low, stay diversified, and keep the long view in mind. The real magic comes from consistency and the tiny, regular choices you make every day. If you want a simple, repeatable framework, this three-stream plan gives you a concrete ladder you can climb without burning out. The important thing is to start with something you can sustain. And now I want to hear from you. Which stream are you most likely to start with this month, and why? Share your choice in the comments so we can cheer for each other and learn together. If this added any clarity to your money routine, please like the video and subscribe for more practical money videos. And if you have a question, drop it in the comments. I'll try to answer and share what worked for others. Remember, you don't need a giant windfall to begin. You need a simple plan, a bit of consistency, and the patience to watch smaller streams grow into something bigger. If this helped, like the video, subscribe for more, and drop a comment with which stream you're starting.